Welcome back to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm really pleased to have with me Chris Crupi. He's the president and CEO of Paramount Gold and Silver Corp. Chris is a chartered accountant and a CPA, and he is the founder of Paramount Gold and Silver, and he's been the company's CEO since 2004, and he's been responsible for building that company, and he's done quite a nice job building a company, not one project, but two projects with multi-million ounce gold and silver deposits on it, and they are making some really great progress. And as I noted in my preliminary remarks, that I really am turning bullish on the gold sector now. I think we're just about ready to see and to have some real good times in this sector again. I just have that feeling based on Nanner's work and a lot of other observations that many people have made. So it's really a pleasure to welcome Chris Crupi with me today to talk about his the rising fortunes of Paramount Gold and Silver. Welcome, Chris. Good to have you with me again.
Well, great to be back, Jay, and lots of things have been going on, so we got lots of things to talk about.
Yeah, we have about 12, 15 minutes to do it, so let's get right on to it. I should mention that the symbol of your company is traded on the New York Stock Exchange and in Canada under the symbol PZG, $1.09 earlier today at least. You have, as I say, done a remarkable job. You've assembled not one but two multi-million ounce gold and silver properties, one in Mexico and one in Nevada. Can you explain your business model to our listeners for those who may not be familiar with Paramount? Tell them what you're planning to do. I mean, some companies explore, develop, and turn them into major deposits that major mining companies who have those skill sets and financial resources buy them out and put them into production. Other companies like to take it the whole way from exploration to discovery to production, and far and few between, I might add. Not many companies are able to do that. But what is the business model of Paramount Gold and Silver?
Well, Jay, we've got a very interesting model. So what we have is we have a host of in-house geologists who are, I call them mine finders, and we spend money looking for prospects. And when we find a prospect, we test it, and presumably, if it's mineralized, we attempt to put a resource or a reserve around the ore. And as you said, we've done that twice now, and the model is interesting because we don't have to maintain a very large in-house operating staff. We don't have to deal with making monthly payments to banks. We have a very simple model where we fund the company. We have funded it in the past, and those funds are used to build a resource in the ground. And we would look to partner the assets, I use that word loosely, with those companies in the space that have those in-house teams that have invested in the engineers, the metallurgists, and all these wonderful people. Mm-hmm. And so I think that is our model, and we're strictly looking at gold and silver. And one more thing that's really important is that we really want to be in those districts, those regions that have low geopolitical risk, and that is going to be, I think, in the next turn of the gold cycle, people are getting discriminatory, and they are going to pick the least riskiest jurisdictions to be operating. And I think that's a theme that you're going to see.
I can't agree with you more on that, Chris. I must say, just this last few days, I started going through a pile of company folders that I have gotten picking up at various gold shows and the like, that as I look for companies, and it was pretty easy for me given the turn of events over the last couple of years. I think geopolitical tensions are on the rise. The discrimination against these third world countries are looking for ways to try to generate wealth, and so they're not so eager to have other countries and companies coming in taking it. So I know that you are focused primarily on Mexico and Nevada right now. Is it North America and Central America or Mexico? So you have now just announced the other day a preliminary economic assessment on your San Miguel gold project that's down in Chihuahua State in Mexico, and I want to ask you, mostly I'd like to talk about that today, have you tell us about that. But before we get to that, I'd like you to perhaps comment just briefly. Tell us about your sleeper project in northwestern Nevada. Tell us a little bit about that. How many ounces of gold and silver, and what sort of economics are we looking at there?
Sure, Jay. So the sleeper project was a mine. It was shut down in the 90s, and when gold just became uneconomic to mine. sub $300 gold. We picked it up a few years ago. We spent about $15 million reestablishing or redefining the resource that was left in the ground. We now have it up to 5.5 million ounces of gold, plus a serious silver credit, a significant silver credit, and that's in counting. So we've been working away at that number, and it's getting larger. We haven't published a report lately, but we do plan on it. And we then took those numbers, Jay, and we did an economic model, much like we did in Mexico. We used a firm out of Denver, a very reputable American firm, and they believe that when we working with them, we could build conceptually a 17-year mine producing 172,000 ounces of gold a year at a cost of a little under $800 an ounce. Initial capex would be in the sort of $350 million range. So this is a big, large, open pit. You see them all over the state of Nevada. It's probably one of the most common types of mine in the United States. It's basically a bulk tonnage type operation where you're moving a lot of rock. And the wonderful thing is that when the gold market turns, and we all know it will, it's just a matter of when, the leverage on this project will be incredible. And I think that's the key that people have to really if people focus on, is that where is the real value in these things? Well, the value is in the ground, and when the price goes, you get an exponential return on that value in the ground. And so I just leave it at that for the moment, but we're quite excited about the future of that project. It was a mine once before. It will be a mine once again. You can get there on a paved road. We've got a power station on the site. We've got the water. We own the water rights in the whole district. So you have all the ingredients, especially the fact that it's in the United States, in the best mining jurisdiction in the world, in Nevada.
Right, and in effect, what you've got is a call option on that, Chris. You know, if you're break even right now, $1,200, $1,300 gold or whatever, actually, I think you're talking about an $800 cash cost. Then, once you start to get over that break even point, obviously, the price of gold goes up, but your costs don't go up nearly as fast, and so your profits rise dramatically, and so that's the leverage factor you're talking about. But now let's talk about your San Miguel project, which is more of a silver and gold project, I believe. How's the mix on that?
You know, economically, it's almost a 50-50 split, which is a little unusual for Mexico. You typically see these are strong silver systems, but this is a very nice system down there we have.
Okay, so let's talk about your latest PEA that you just put out now on San Miguel. Talk about the economics of that project.
Sure. So, Jay, what we did is we took all of the drilling we've done, 100,000 meters, with the resource of about 1.7 million ounces of gold and 120 million ounces of silver, and we said to ourselves, what's it worth and how can we build it? So we spent a lot of time thinking about that. We would start the project with a large open pit, and so these would be several deposits. So we would start with a pit. We would build a leach pad. We would leach the material and that would only take us about 6 months to get into production. Initially, the capex on the project is extremely low at $69 million. It's very hard to find a project under $100 million these days.
Oh, I agree. It's
financeable in this market. And once that project gets rolling, then we start moving towards the underground development, which is a little more complicated, but the grades are much higher. And the project itself, the whole project will run for 17 years, which is a reasonable length of time to justify a mine. We'll get about 55,000 ounces of gold plus about 3 million ounces of silver on average, which puts us as I would say a small mid-tier producer, or maybe a large small producer, whatever the case may be. But the beautiful thing is that our costs are fairly low, comparatively speaking. And you're talking in the high 500s an ounce for cash costs, and probably all in somewhere between maybe 8 and 900. So, we have some margin here at the current gold price of in the 1,300 range, down to the 900 range, where the project will still get off the ground and still make money. And so we're quite excited about it. We're now moving to pre-feasibility, and we can talk a little bit about that after the next step. So we're really moving forward with this thing.
Okay, so you're going to do a pre-feasibility study. Is that starting immediately, and what might go into that, Chris?
It is, actually. We put together a budget, which we published in our PEA, and it's $6.5 million is the budget to get the pre-feasibility done. It'll take the better part of a year. We've ordered up 4 drill rigs that are going to be on site, if not this week, right after Labor Day. And, one of the things that people have to also remember is that the best time to be doing exploration, if you're an exploration company, is in the worst times.
Yeah.
Because I can get 4 drill rigs now for the price of 2. I mean, if you could even got drill rigs in 06, 07,
right.
It was months. And now we have bidding wars to supply them. You can get professional labor wages are down. Mm-hmm. The cost of oil is not really that high right now either, and that's a major input. So we're excited, we're funded, we're excited to get this off the next step. We'll have the drill program will run till the end of December. It'll be a combination of infill drilling, expansion drilling, and exploration drilling, all with core rigs, the best type of drilling you can do. So we're going to have a steady set of news flow for the next 4 months, and leading up until the pre-fees, where we're going to bring this up to a reserve grade ore.
Now, have you had some interest from major mining companies? I know you can't really talk about names, but have there been some companies that have expressed some interest in either of these two properties?
Oh, absolutely. Given the location, particularly in Mexico, where we have most of the major mining operations exist, such as the Pan American Silver, Coeur d'Alene Mines, Gold Corp, Agnico Eagle, Carlos Slim is in the district now. So all of these people are in this district, and I can assure you that I've made sure that not only those people, but other people that need to know about it know about it and have seen it. And as you know, these things take a long time. It's not like selling a widget. You need to understand it. It's a scientific exercise, and then you have to bring engineers in. It takes a long time to understand these deposits. So yes, we have, the ultimate goal is to find a partner. So you got a date before you can get married, right, Jay? Yeah,
and you said you defined the word partner loosely. Would you care to elaborate?
Well, I think there's three ways you can go about this type of exercise. You can find someone that you're comfortable working with, but ask them to bring their labor to the table and their capital, share the pie, and we continue as an exploration company, and we let the big brother run the show, and we split the profits. That's one that's typically done under a joint venture, as you know. Mm-hmm. Those in theory are very they're very good ways of doing business, but they're sometimes challenging and complex.
Sure.
Then there's sort of the in between, where sometimes you look to sell your asset on a one-off basis to somebody who, again, might be able to do it on their own and do it in-house. And thirdly, I think the ultimate goal of an exploration company is to sell the company to a larger player, and in a sort of a M&A type stock transaction. And that's, I think, if you put 10 guys like me in a room, I think 9 out of 10 of us would say that's the best thing for the shareholders from a risk return perspective. Mm-hmm. You might have 1 out of 10 who really wants to build it, and sometimes they can. But these things are very difficult to build unless you have the skilled and most importantly, experienced people in-house.
Oh, that's for sure. And one of the things that makes me pleased as a shareholder of your company, Chris, is that you named a lot of different possible companies that might be interested in a project like this. And I would think also the location and also the low capex has got to be major pluses for this, and the economics should work out very well. But it seems to me that if you have a number of different prospective buyers, it's better than having just one. So that also is, I think, something that is very positive, I would think, in your case. Although, as you say, it takes time. These guys have to study your project, learn to know it. They have to sign confidentiality agreements, I'm sure, and start to pick up on the intelligence that you've built as you explored and developed your San Miguel. How are you funded right now?
Well, we've got about $7 million right now, and we have no debt. We have no obligations. We owe nobody anything. So we're in the ideal situation. I would not want to be a small producer in this market wondering if the gold price drops $5 if I'm out of business tomorrow.
Yeah.
We will be in business tomorrow. We have a deep-pocketed shareholder who's been with us, and that's very important when the times are rough, as you know.
Absolutely.
And we can take our cash burn down to literally zero if we so choose. And so we're ramping up the drilling because we think that an exploration company should be in the business of exploration, shouldn't be sitting on their cash balances, And I think we're timing. We've got a good inkling, like you do, that things are going to happen in the sector.
I really feel that's the case. I maybe it's wishful thinking, but no, I think there's more reasons to believe that it is because of many different issues that we talk about on this show. One more thing before I let you go. Management skin in the game. Does management own shares, and
Absolutely.
to what extent?
Absolutely. At one time I was the biggest shareholder. Unfortunately, these things change as you have to sell shares, and but I have 4 million shares. I've bought over 400,000 in the last 2.5 years, and that's all documented on the SEC filing system. I'm one of the few guys that actually are putting their money where their mouth is. Albert Friedberg, our biggest shareholder, has 25 million shares. A number of other people on the board and associated with Albert and myself who work with the company have, several million, if not tens of millions. So we've got a good, tight group of people here. And they've been with us. We've all been together for a long time, and that's the key also, is to have some long-term thinking.
Absolutely, it is. Thank you very much, Chris. We're out of time. I want to thank you for sharing the story again with our listeners. It is an exciting story. I am a shareholder. It is also a company that is recommended in my newsletter, Jay Taylor's Gold, Energy, and Tech Stocks. So thank you very much, Chris, and I look forward to talking to you again sometime in the near future for an update.
Thank you, Jay.